Welcome back to Trading 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts and 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades is Jessica Inskip, Director of Investor Research at stockbrokers.com. It is great to see both of you. Jessica, you know, I love when we have the chance to sit down with you. Before we jump into the tickers on your list today, let's get out your big picture take on this market action. It feels like the bulls still, you know, are kind of grinding higher. What's your take?
Yeah. Now I want to get to the technicals because we've got a really big week in terms of data from fiscal policy, monetary policy, and of course earnings. So it's interesting to see how that all transforms. What I'm noticing is we've hit my resistance on the S&P 500 equal weight. We're making new highs on the S&P 500, but as soon as we were reaching those new highs on the equal weight, we immediately stopped, which means we need a catalyst in order to push that forward. Otherwise, the only path forward for the S&P 500 seems rather narrow in my view, which would be that efficiency and AI boom that we've been talking about. I do think there's some fiscal tailwinds that were once headwinds, but now I need the other piece of that puzzle, which of course is what's happening with monetary policy, what's happening within the consumer, and then earnings, because the market does move on earnings and everything is just an input into that equation to understand if we're having margin expansion or growing earnings, if you will.
Okay. All right. Great point there in terms of the looking for a major catalyst here. Let's talk about the first ticker on your list. That's QCOM, Qualcomm. It's been a slight underperformer compared to the S&P 500 year to date. What's your view on this one?
Yeah, speaking of upcoming earnings as well, Qualcomm, so they're really reliant on the iPhone, and I think that's something very important to be cognizant of. This actually showed up on my radar due to my weekly technical scan, where I look for the crossover of the 13 and 26 weekly moving average. On that scan, very interestingly enough, there was also a lot of oil and energy with ETFs and income opportunities, which is a side note there. Nonetheless, for Qualcomm, it is in a bullish trend. I do like that. There is definitely strength, and I think the 40-week weekly moving average is the solid support that I'm looking for. Now, when I'm thinking of the headwinds and I think of Qualcomm, I immediately think of Apple. The Apple is moving a lot of their modern production in-house, and there's some diversification. We're waiting on something AI from them, but it seems like this expansion or iPhone revenue or even those phones are kind of coming to a halt. But Qualcomm is diversifying. They're diversifying beyond smartphones. In fact, they have it by 2030. They're expected to add 40% of their chip revenue will come from AI PCs, data centers, automotive, and the Internet of Things, and that's up from 27% previously. We see an increase of AI PCs, so this arms race, I think, is going to power those thinner laptops with longer battery life. We always want something smaller to work faster, and that's what consumers really like to see. In addition to that, there's a data center push with the AlphaWave acquisition that gives Qualcomm a foothold in the AI data center connectivity. It's a crucial piece of the AI boom as companies build out more infrastructure. And then from a valuation perspective, it's around 13.76 next year's earnings, which is well below its usual range from 15 to 18 times. So I really think it looks undervalued from a longer term view. There's some headwinds absolutely with the iPhones, but some tailwinds with the broader AI narrative.
All right. Well, that begs the question, what does this chart look like from your perspective, Rick? What trends do you notice?
This is one of those charts where it kind of depends on your perspective. If you had a very short-term view, you could say, well, this looks kind of range-bound based on this price activity here. We've got some standout levels, 151 to the downside, our green line, 164 to the upside, our red line. That's where price has kind of bounced around here. And if you were to backtrack even too, you can see that, for example, 151, a very frequent low point for price going all the way back over there as well. Then the 164 level similarly was a stopping point many times for price historically. So that's one short-term view. If you were to think a little bit longer term, you could see that since things calmed down a little bit from the April tariff news shock event here, mostly price has been traveling within the boundaries of this upward channel that you could draw our two white dashed lines here. And from there, you can see that price has crossed above our moving averages. Our faster yellow 21-day exponential moving average is crossing above its slower peers. price is hanging on, still within the boundaries of this channel, though, now still halting near that resistance level. If you were to think even longer term, look back over here, this trend line that would start where we had this high point that was near those 52-week highs, connecting as best as you can through some of this price activity. We're breaking out through that pretty strongly so far here. So as I said, kind of it depends on your time frame that you're thinking about here. But either way, 164 is a standout level to the upside in this case here. If we were to look at our volume profile and standard deviation channel studies, we can see that in addition to the other technical factors I mentioned here around this 160, 155 area, we've also got our point of control for our volume profile, the heaviest trading area. We've got our moving averages coinciding, our trend lines, etc. So this is a key downside area for support. Volume picks up once again here near about 170. A quick visual to a weekly chart with those moving averages Jessica discussed, 13 and 26. You can see the crossover happening here, price holding on above these areas here. And the next volume node that stands out on our longer term chart, once again, that 170 area.
All right, Jessica, let's move on to the next ticker on your list. That's AEO, American Eagle. I mean, that soared recently. It's been buzzed about. It's part of the, renewed meme stock mania, YOLO trade. It's got that Sydney Sweeney denim campaign. So what's your view on this one?
Yeah, lots of buzz around it. I tossed even bringing it up today, but I think it was absolutely worth it because it's a case of hype over substance. The fundamentals don't support the price action in margin risk, plus this negative sentiment and this tone that's going around social media really makes American Eagle a strong short-term sell in my view. Now, there is some interesting takeaways from this. Anytime we see this meme craze, we could view it as a risk on sentiment like we did earlier on in 2020, or it could be the last leg of consumer constraints where those gambling suddenly increases. So it really depends on your view on which way this could give us an idea, at least into the retail trader and sentiment. So something I want to dive deeper into. But as far as buying into that hype, there are real headwinds that weren't there for necessarily other meme stocks. This has a lot of tariff trouble. American Eagle relies heavily on Asian imports, which are facing really high tariffs. There's some negotiation deals, but that could have already happened. As a result of that, guidance was pulled in May, where the company withdrew full year guidance, and that was margin pressure, and that absolutely had to do with uncertainty, which leads to profit pressure because of those tariffs potentially continuing to squeeze those margins. We see that as the earnings trend does not look as well either. There's limited pricing power, and there's this negative public sentiment as well around social media. That's something I want to pull when we're looking at these meme stock buzz. Aside from the trading activity, which is, oh, get on this, if we look at the consumer side, it's, oh, this is controversy, and there's not necessarily agreement with what happened with the Sydney Sweeney ad. So is it overhype? And is that hype going to translate into actual earnings translation? I'm not sure of that, because largely the consumer is saying, I don't want to support this company because of the ad is. That's the sentiment on social media, at least.
Okay, all right. Rick, what do you notice about this chart for American Eagle?
Yeah, it's funny because sometimes, the price activity doesn't follow logic or reality. It can be momentum based, which can be a pretty tricky situation to try to make sense of and to trade here. And if we were to kind of think about some important levels that might stand out both to the upside and the downside, we can see here 13. That's a ceiling that really seems noteworthy to me because it's about where price has topped out several times here. That's one area to watch. We can also see 1150, our green line here. That's kind of where things bottomed out and then topped out and then bottomed out once again. That's about where we're hanging on to this breakout area here. Another level that seems to be one of these kind of sticky price levels that we can see here. Additionally, 1050, our light green line, more lows here and then highs. Old support becoming new resistance once again here, lining up fairly closely with two of our moving averages as well. You can see we also formed a fairly consistent consistent floor here near about 950 or so. So some big standout levels here. We can also see that RSI, our momentum indicator, has pushed into that overbought area, that threshold of 70, typically regarded as a sign of strength in a trending market. You can see we had very heavy volume here during some of this run up as well. So be on the lookout for bearish divergence on the RSI, for RSI to cross back below that 70 mark, and for the price activity to be in a mismatch between momentum and the higher closes of price here. If we were to look ahead a little bit at our other studies, well, most of the trading is down here at these low levels. And it's kind of there's some key distinctions here. 1050 or so, that's our point of control, roughly around there. Then 11, then 12. So it's kind of this big clump of volume with a few standout areas to make sense of here. But things don't really pick up again to the upside until this tiny little bump here near our 250 two-day EMA around 1420 or so. So that could be one upside area to consider here. And again, you know, these kind of momentum meme stock trades, it can be tricky. Like I said, you know, staying risk defined can be a good thing to think about, so you don't get caught in some kind of runaway situation. No one wants that kind of thing to happen.
Rick, I can tell you really care about the retail investor. Rick is like caveat, caveat, caveat. All right, Jessica, let's talk about your final trade on your list. That's Alphabet Google. It has finally been catching a bid recently. What's your view on this one?
Yeah, there's strong earnings. It was a great quarter. There's a big AI investment, and there's really some tailwinds from this infrastructure investment and some favorable tax incentives that were found within the BBB or Big Beautiful Bill. And I really think Google remains one of the most compelling mega cap AI plays in my view, or Alphabet. One day I'll say Alphabet instead of Google, but we'll get there, Diane. Across the board, though, revenue beat, EPS beat. But my more important ones that I'm really focusing on is search revenue. That was up 12% year over year, when it's expected to be 9%. Now, we are very, very concerned because search volume has really changed, or consumer behavior has changed. Search has gone over to social media, and now search has been taken over by ChatGPT. And really, I feel like the winner, at least in this space, is those that can make ad revenue based off of what seems like these free features, something we talked about actually last week. And so seeing an increase in search and some revenue beats is very, very good in my view. Now, the CapEx spending, I think, was also very interesting. There was a raise to $85 billion, and that's up from about $75 billion. And that's really focused on servers, custom chips like the TPUs and GPUs, data centers, more AI cloud growth. And a lot of that revenue driver, one, is that ad revenue. But if you look at the the spending that's going into AI, it has to do with those provisions found in the BBB bill. And I think that gives you a bonus stock today. If there is some provisions that allow for tax offsets or accelerated depreciation that Google or Alphabet is taking advantage of, that benefits NVIDIA. That's your bonus stock of the day. So as we get earnings for Meta and Microsoft, I'm going to look for that same type of theme. And then, of course, that will give us an idea of what's happening within the AI race. But more importantly, the takeaway from this is there is more spending, but there's real revenue with AI investments.
It's hard not to still call it Google, Jessica, because the ticker is that. So that's why I always say Alphabet Google. All right, Rick, take us through the technicals, right? All right, Rick, you're up.
Google, I'll just say it. I like saying Google better too. Google is here in an important area here, this gap level here. We had our low point near 202, 203, and then our high point after the gap down about 192, 193 between those areas here. So our red and pink lines. This is an important area for this particular stock here. And after a rather lengthy rally here, we had more of a wide-ranging channel. Pretty consistent, though, moving across those low closes for the most part here. We're near the upper boundary of this channel. We're above our moving averages. We're encountering this resistance area now. And earnings perhaps did not give as much of a pop and an upside catalyst as some of the bulls may have hoped here. So this area, 192, 193, is a key place to hold here. That would be an important foothold for the bulls to hang on to if they wanted to take a run at filling that gap here, which has not been filled yet. We had a pretty V-shaped recovery, but now we are encountering this old high point here once again. RSI, for the most part, holding up pretty well. We are seeing that we are in the overbought area once again here. We are seeing maybe perhaps a small amount of divergence here. You want to see the RSI making corresponding highs along with price here. So once again, look for a breakdown in that indicator along with price drifting below some important technical levels here. When we look at volume profile and standard deviation channels, we can see here this level, our point, our red line here, matching up with that post gap down high. That is a standout volume area. So around 192 would be another extra emphasis on this area. If we were to look up ahead, though, to filling the gap, our +2 standard deviation channel, 2 standard deviations up from our linear regression line, our line of best fit, matches up really closely with that gap level. So that could be an important area to watch if we do get some kind of upside breakout here. Finally, another smaller node here comes in around 185, another downside level that sticks out.
All right. Thank you, Rick and Jessica. Thank you both for a look across the big three today. 3 stocks, 3 charts, 3 tickers today. Thank you, guys.